it's like chalk and cheese. They are two completely different spheres and completely different industries, and I think the purchase pathway is very different for both these categories. FMCG is basically a product-based sale, and I think what you really need is some good advertising and you need some good distribution, and I think if you have the two going, you'll get the consumer pull to go and actually buy those products. So it's a far simpler engagement. It's a very high frequency purchase product. So typically FMCG products are bought at least at a monthly interval, if not more often. So there is an opportunity for you to continuously engage and re-engage with your consumers, because he's coming back and making that purchase month on month. It's very different in banking, as I've realized over the last 2.5 years. The first thing is that this is not a one-time purchase, it's actually a relationship. So, that's one. The second thing is that while advertising can actually build some preference and recall, it's not a trigger for product purchase. So consumers don't see advertising and rush to buy a product. Right? Because the need has to be there for them to buy the product. They may have already bought it, or they may not be looking to buy it in the near future. So for example, if I do home loan advertising, it doesn't necessarily mean that people will rush and start buying home loans. In FMCG, we don't own the store, but in banks, we own the store. So we own all our branches, we own all our ATMs. So that's about 2,000 odd branches and about 11,000 ATMs. Now that's a lot of places for us to manage, to brand, to have the brand proposition being communicated there, and also to ensure that the customer's journey in the branch is good. So you could see great advertising, but you could walk into a branch, and if the branch is either crowded or cluttered, or you're just being sent from one desk to the other, you'll sort of get disappointed, and you may not decide to make to build that relationship with the bank, which advertising may have made you want to do. We deliver the brand through people. In FMCG, you don't deliver the brand through people. In fact, company employees never come face to face with consumers. Whereas in a financial and banking industry, it's all about the people. So we have, say, 40,000 odd employees, and every transaction which happens between these employees and our consumers on a day-to-day basis actually impacts the brand. So we need to therefore have internal training, communication, strategies, customer strategy, to ensure that what we are advertising and what promise we are making, our employees are delivering in their interactions. The use of analytics and digital, because we have a lot of information about our customers internally, since it's a relationship and we know all their transactions and what are their behavioral patterns, and we can therefore make marketing messages in response to that. Also, a lot of research is done online for any financial product or service. I don't think you'll find people researching which soap to buy, but almost everybody will come and research which home loan to take, which credit card to buy, or which bank to open an account with.